What's something people don't know about the crypto world? It evolves at lightning speed. Welcome to Crypto Trends. We bring you the latest in the cryptocurrency world. From breaking news to market updates, we've got you covered. Stay ahead with our daily updates and expert insights. Subscribe now and hit that notification bell. The Bitcoin mining industry has been under immense pressure in recent months. Profitability dwindled as energy prices soared, and Bitcoin's price struggled to gain momentum. This forced miners, especially smaller operations, to sell a significant portion of their mined Bitcoin to cover operational costs. This constant selling pressure weighed heavily on Bitcoin's price. However, recent data suggests a shift in this trend. Bitcoin miners seem to be selling less of their mined Bitcoin, signaling a potential easing of this pressure. This change comes after the much-anticipated Bitcoin halving, an event that slashed the block reward for miners in half. This shift in miner behavior has sparked optimism within the Bitcoin community. Could this be a sign of a healthier mining industry and a potential catalyst for a Bitcoin price surge? Let's delve deeper into the dynamics of miner sell pressure and explore what this change might mean for the future of Bitcoin. Bitcoin miners play a crucial role in the Bitcoin ecosystem. They are responsible for validating transactions and adding new blocks to the blockchain, ensuring the network's security and functionality. As a reward for their efforts, miners receive newly minted Bitcoin. However, mining Bitcoin is a resource-intensive process, requiring significant investment in specialized hardware and electricity. To cover these costs and generate profit, miners often sell a portion of their mined Bitcoin on the open market. When miners sell large amounts of Bitcoin, it increases the selling pressure on exchanges. This increased supply can lead to downward price pressure on Bitcoin. Conversely, when miners hold on to their Bitcoin or sell less, it can signal confidence in Bitcoin's future value and potentially contribute to price appreciation. Data from on-chain analytics platforms like CryptoQuant and Glassnode paints a clear picture of the recent shift in miner behavior. Metrics like miner outflow track the amount of Bitcoin being moved out of addresses known to belong to mining pools. Since the Bitcoin halving in April 2024, these metrics have shown a consistent decline in Bitcoin outflows from miner wallets. This suggests that miners are selling less of their mined Bitcoin, choosing instead to accumulate or hold. This reduced selling pressure is a significant development, potentially indicating a belief in Bitcoin's long-term value proposition. The recent Bitcoin halving, a pre-programmed event that reduces the block reward for miners by 50%, has significantly impacted the mining landscape. With the reward cut in half, miners now receive less Bitcoin for their efforts, putting pressure on their profitability. This reduction in revenue forced many miners, especially those with less efficient operations or higher electricity costs, to reevaluate their strategies. Some were forced to shut down, while others consolidated into larger pools to remain competitive. However, the halving also had a positive effect. It reduced the rate at which new Bitcoin is introduced into circulation, potentially making Bitcoin more scarce and valuable over time. Section 5. A bullish signal. Potential upsides of reduced selling. The decrease in miner sell pressure has several potential positive implications for the Bitcoin market. Reduced downward price pressure. With less Bitcoin being sold on the open market, the selling pressure on exchanges decreases, potentially leading to price stability or even appreciation. Increased scarcity. As miners hold on to more Bitcoin, it reduces the circulating supply, potentially making Bitcoin more scarce and valuable. Positive sentiment. The reduced selling pressure from miners can be interpreted as a sign of confidence in Bitcoin's future, potentially attracting more investors and boosting overall market sentiment. Section 6. The struggle is real. Smaller miners face mounting challenges. While the overall decrease in miner sell pressure is a positive sign, it's important to acknowledge the challenges faced by smaller miners. The halving, combined with fluctuating Bitcoin prices and rising energy costs, has significantly impacted their profitability. Many smaller miners struggle to compete with larger, more established mining operations with access to cheaper electricity and more efficient hardware. This has led to a decline in hash rate contribution from smaller miners, potentially making the network more centralized. Section 7. Navigating the future. A look at the road ahead for Bitcoin. The Bitcoin mining industry is in a constant state of flux, adapting to technological advancements, regulatory changes, and market forces. The recent decrease in miner sell pressure is a positive development, but it remains to be seen if this trend will continue. Several factors will likely influence the future of Bitcoin mining, including Bitcoin price. A sustained increase in Bitcoin's price would significantly improve miner profitability, encouraging more investment and participation in the industry. Energy costs. The cost of electricity remains a major factor for miners. Finding sustainable and cost-effective energy sources will be crucial for the industry's long-term viability. Technological advancements. The development of more efficient mining hardware can help offset rising energy costs and improve miner profitability. Section 8. Conclusion: miner sell pressure easing could signal bullish sentiment. The recent decrease in Bitcoin miner sell pressure, evidenced by on-chain data, is a noteworthy development for the Bitcoin market. While challenges remain for some miners, particularly smaller operations, this trend suggests a potential shift in sentiment within the industry. Reduced selling pressure from miners could contribute to a more favorable market environment for Bitcoin, potentially leading to price stability and even appreciation. However, it's important to remember that the cryptocurrency market is notoriously volatile and influenced by a complex interplay of factors. While the easing of miner sell pressure is a positive sign, it's just one piece of the puzzle. As Bitcoin continues to evolve, understanding the dynamics of the mining industry remains crucial for investors and enthusiasts alike.